Welcome back, and thank you so much for staying with us. This is Financial Markets. My name is Anthony. I'm with Mr. Arnold Babubwagye, and he's the Acting Director of Financial Markets Development at Bank of Uganda. Well, in the first segment, we've discussed quite a number of things. You have our event coming up next week, which is the Capital Markets Economic Development Forum. And this one of a kind is going to be held at Serena Hotel, and they're going to be discussing a number of things that will help them fund the tenfold program or the tenfold growth program that the government is looking at to expand our GDP in the next 15 years. Now, Mr. Arnold, when you look at this event, you have invited the CEO, Mr. Koko of FMDQ from Nigeria. Of course, the first question is, who is this guy and why FMDQ in this particular case?
Great. So, Mr. Onadele Koko is the CEO of the FMDQ Group, PLC. He was the first CEO of FMDQ Nigeria in 2013. But I'll just give you a background about how this all came about. So, following the global financial crisis, 2008, and the Eurozone crisis, 2011. The financial market participants, the dealers of the banks, had a discussion with the governor at the central bank and told him that, look, the concessional funding has dried up because all these countries have just gone through a recession, a depression, they've just gone through a crisis. And therefore, everyone was inward looking, right? Therefore, the sources of financing that were supporting the economy were drying up, and therefore there was a need for them to explore the domestic resources, right? Now, the issue was that all of them had day jobs, okay? The central bank were busy with their usual agenda of monetary policy and financial system regulation and financial stability. The treasurers of the banks are trading on a daily basis. Everyone plays their role. The Capital Markets Authority are regulators, the brokers are intermediaries, etc. There was nobody focused on market development. Because market development is a lot of work. You're talking about developing the right regulatory environment, the right infrastructure, capacity, innovation, products, etc. And it's a full-time job. So someone had to do it. So Koko was brought on because he had been in one of the banks, and there was a committee that was created. They had a discussion, they had a debate, okay, prolonged debate, and said, look, how do we unlock the opportunities in the financial markets, specifically the fixed income market, right? So the long and short of it is that they agreed to create this entity called FMDQ, okay, and FMDQ has a stake. The central bank has the biggest shareholding, as well as other market players. It is open. So as a result of that, since 2013, they've been able to unlock various products, infrastructure bonds, local government bonds, sukuk, the Islamic financing instrument. They've championed sustainability, through taking lead in the Lagos Sustainability Financial Center, as well as sustainability products, green bonds, blue bonds, that kind of thing. So they have really, because there's this focused entity on market development, that's how FMDQ has gained its prominence. In addition to that, risk management is very important in financial markets, because markets go up and down. So they've also developed the derivatives market. They have a number of derivatives products which are which have helped de-risk some of these instruments. And the existence of these derivatives helps strengthen the confidence of investors. That they have ways of protecting themselves against risk of price fluctuations. So that is the success story. Okay, so we thought that, look, someone has done it in Nigeria. Before we identified FMDQ, we had done a lot of benchmarking. Looked at different markets and how they've been structured, etc. So we felt that now that the country is discussing the tenfold growth, and we're looking at how financial markets can contribute to this growth, someone who has done it before can come and share their experiences. And that is how we've been able to invite Mr. Onadele for the event on Wednesday. So we are hoping that the key stakeholders who are coming will listen in to the Nigerian experience and, borrow a leaf, and maybe it will guide the way that we leverage the markets here to fund the growth.
You found it so profound that he comes physically, because I know he could have done it online through Zoom, physical. Yes. Why did you find it so important for him to touch base with these stakeholders?
Yeah, that's very good. Actually, at the time that we were thinking about inviting him, of course, all his ideas of Zoom and etc. were mooted. But we felt that this is a very topical area, right? And we all know about online meetings and Zoom. You may not get as much attention, as much focused discussion as you would in a physical engagement.
That's right.
So he's here from Monday to Thursday, right? So the main event is on Wednesday. However, between Monday and Wednesday, he's scheduled to meet different key stakeholders who may have unique questions, unique engagements. The Ministry of Finance, the Bank of Uganda, the treasurers of the commercial banks. So that is why a physical engagement is important, because this is a prolonged period of time, and we are very grateful to him because he has come, just to meet sister country Uganda, and just to support us. We're not paying him, but he's very passionate about markets. But also looking at it from a Pan-African perspective. It's also not good for you to grow on your own. It's also good to help a brother to rise up, because at the end of the day, it's a win-win for all of us.
The African spirit.
Absolutely.
Wow, that's amazing. You talked about risk management, and you talked about the derivatives. And amongst the different products that we have that you think we should have, the local government bonds, green bonds, blue bonds, why is it important to tailor these to a particular cause? For example, the green bonds are tailored to climate change causes, and then the local government bonds tailored to local government. Why is it important to derive these bonds and not just have a basic bond that we are having currently, the way they are running? Why is that very critical?
Yeah, that's a very good question. So when you profile investors, investors are of different categories. You have investors who are very ethical, investors who can only invest in Sharia compliant instruments. You have unique investors like the diaspora community. So you have investors who are risk averse and those who can take risks. So you must be able to structure a product that can be able to meet the needs of the unique investors. For example, we already have the traditional bonds that we issue at the moment. The diaspora community, Ugandan diaspora, are unique. If you look at the diaspora who are in Europe and in US, many of them moved there a long time ago, during the times of political persecution, in the olden days of Uganda, as you know. So many of them still have that that perspective of how.
I see so many Black Americans with.
That perspective of how the country is run, etc. Now, but they still have family here. So if you attract them to an ordinary security, they may not be as interested. But if you told them we're issuing an infrastructure bond and the proceeds are going towards construction of a hospital in Masaka, this guy in the US knows that he has family in Masaka. It would appeal to him that, I'm actually investing in improving my family back home. The Muslim community are very strict about the way that they invest. They must invest in Sharia compliant instruments. So, and there's a lot of money in the GCC countries, by the way. Just to give you an example, I'm sure you've been seeing the trend. In Qatar hosting the World Cup, they spent so much money. Live Golf in Dubai, Formula One. There's a lot of money that has accumulated as a result of several years of exploring the oil proceeds. But this money can only go into Sharia compliant instruments. In order for you to attract that money, then you need to be able to design a product that suits their requirement. So that goes to, and then Oxevinga, the retail instrument. Currently the minimum investment is 100,000. The local guy doesn't have that 100,000, but he may save 5,000 shillings per day, 10 shillings. Then we're also making it convenient so that he can use his mobile phone and mobile money. That every day I can have an instruction that 10,000 shillings can go into this bond. Okay, so you need to customize this product for the unique interest of the people. That's why we have to diversify the product range.
That's amazing. Talk about retail investors. One of the things that I personally get hurt is that we have so many institutional investors who are doing very good, but they don't spread the word, or they don't tell people that, hey, this is what we do. This is what we do with your money. I know NSSF tries, but they don't really focus so much on educating people that they can actually themselves also invest, and go direct into the market. So I want us to look at how our market is structured, from the primary market to the secondary market, from the competitive bidding to the non-competitive bidding, and the dealership, And I want our viewers at least to pick away from this show an idea or two how they can be able to tap into the current products, even before we look at the new ones, so that we get them interested in the conversation.
Yeah, so I'm always sharing with whoever I meet, groups, Rotary groups, different schools, etc., about the opportunities that government securities provide. And I'll tell you that the current environment that we're in, government securities are arguably the best investment you can have for taking no risk at all.
Yeah.
So what is the biggest risk with investing in securities? The biggest risk is inflation, that your earnings are going to be eaten away by inflation. Fortunately, we've managed to contain inflation. We have a very good record, Bank of Uganda, and government in general, in terms of macroeconomic stability. Now, when you have certainty that inflation is really going to be stable, and you're earning a return of 15%, as is right now on the 20-year bond, that gives you a net of 12%, because inflation is at about 3-4%. So maybe you get a net of about 10 to 12% per year for doing absolutely nothing. Okay? What I mean is that you invest your money and relax, and your interest will come in. You don't even have to claim your interest, right? And I'm always arguing that, look, if you profile different investment categories, and you look at 10% net on securities versus other categories which come with risk, then you realize that maybe you need to put some of your money in government securities. Now, how does it happen? First of all, the minimum investment amount right now is 100,000 shillings.
Yeah.
When we move to Okusevinga, then we'll be able to cut it down to 10,000 shillings.
Yeah, that would be amazing.
Right now, you need to open up a CSD account with any bank. A CSD account, ladies and gentlemen, is an account that just holds your securities. It's not a cash account, so you don't pay any money for it. Okay, you fill out the form, open the account, and then when you're ready to invest, it's a minimum of 100,000 shillings, and you invest. There's a whole pool of assets: 3 months, 6 months, 1 year, 2, 3, 5, 10, 15, and 20. You can select any of those, and your bankers will be able to guide you on which one to invest. They all have their different interest rates. Now, I also like to bring it home, because there are different categories of investors who may not relate with the conversation because it still seems to be a bit sophisticated. But I give you an example of a parent who's trying to save for their child's education. If you started investing 100,000 shillings every month for your child's education, and it's growing at a rate of, for argument's sake, 10% net, of course there's a tax. You must give to Caesar what belongs to Caesar. And to God what belongs to God. So, if you're investing 100,000 shillings per month, as soon as your child is born, by the time they're 18, and you're rolling over the interest, you will not believe how much money it has grown to. It would be a significant amount of money. That is for the person who is saving. Another example is for a retired worker. You have worked so hard for 30 years, and you've earned your retirement package from NSSF. People are tempted to get into businesses which are risky, etc. Government securities give you a safe investment where you're going to earn a good return and enjoy the rest of your retirement. And there are so many success stories that you need to host here, by the way, one of these days. So there's different categories. The business community. These government securities are the best collateral for loans. Business community have to have land, physical infrastructure to be able to get facilities from the bank. If they bought government securities, this loan is, you don't need to go to Ministry of Lands to do a search on the property evaluation, etc. Within 24 to 48 hours, the bank already has the value because they have access to the system, and they can be able to grant you that loan. You know, it is the highest
They have your
quality collateral.
CSD.
They have your CSD account, absolutely. You know, so it is the best investment. I'm always encouraging everybody to do it. Open up a CSD account. It is just a 2-pager, and minimum is 100,000 shillings, and you'll be able to invest, and you'll be home and dry.
So how about the primary dealership?
Yeah.
Yes. Are there opportunities as well for the big guys who would want also to get into that?
Yeah. So we reformed the primary dealership system, and so the primary dealership essentially means there is a primary market, which is the market of first issuance. You know, for the first time, and that is at Bank of Uganda. Government want to raise money, they come to the primary market. Now, Bank of Uganda is not designed to meet everybody. Okay, Bank of Uganda is a banker to government and a banker to the commercial banks. So we can only engage through commercial banks, and that's how we selected primary dealer banks, and there are currently 8. These are like agent banks. Okay, so these banks are the ones that come and invest in the primary market. Okay. Now, that is the competitive section. Competitive, ladies and gentlemen, is 200 million and above.
Yep.
If you're non-competitive, then you're guaranteed allocation in the primary market. You access the primary market, but still through your bank, right? The big investors above 200 million have to compete for these instruments. These instruments are very attractive, and they're quite competitive, by the way. We have offshore players who hold between 12 to 15% of the total outstanding instruments right now. That's maybe to a tune of about $1 billion, $1 to $1.2 billion, right? So the primary market is designed for the wholesale investors, but the wholesale investors would have to buy through their primary dealer banks, because the primary dealer banks are the only
So as
ones
an
who come.
individual, I cannot compete in the competitive bidding unless I have an account with the bank, right?
No. Actually, as an individual, if you have 200 million and above,
can't I
your high
compete
net,
directly?
absolutely you can. You can. But you would have to acquire your instruments in the secondary market.
Yes.
Primary dealers go to the primary market. Competitive investors buy from the primary dealers in the secondary market. So the answer is yes.
Okay.
The difference is that you're competing with many others. Okay, so those who get the best price, best value are the ones who get allocated. But fortunately, the market is liquid enough and is big enough that everyone will eventually get these instruments. The retail guy, okay, myself, I don't know about you, below 200 million shillings, can access the instruments directly in the primary market through their bankers.
I don't know. You might be a retail in the competitive bidding. I don't know. But the fact that all these instruments are available, and you also talked about the 200% liquidity, it shows that there is potential in the markets, right?
Yes.
And I don't know what would be your last word, maybe, for our viewers who are out there looking forward to this Wednesday event. They're going to be able to stream it live, because at least for Smart 24, we're going to be able to do it live here. But also, would there be some who will be invited physically to attend? Are there some requirements? Maybe you can brief them on that.
Thank you. Yeah. So the event on Wednesday is an invite-only event.
Okay.
Unfortunately, of course, you know the room cannot take as many people as possible.
Okay.
But we're going to be streaming live, you know, so the link will go around. So Smart TV will be able to circulate a link, and all institutions, Ministry of Finance, Bank of Uganda, CMA, on their various social media platforms. So you can tune in online, okay? But maybe just to conclude and say that the financial markets provide big opportunity for everybody. I'm talking about you and I, you know, individuals to invest, because all of us want to make money, right? I'm talking about those who are trying to raise money. You know, companies can raise through issuance of corporate bonds. Local governments, government itself, the central government, etc. All these can raise money through the financial markets. We're talking about funding the tenfold growth. We need to diversify the funding sources so that while we are increasing revenue in terms of taxes, while we are increasing exports, we're also infusing capital through the financial markets. So it is a win-win situation. Please tune in on Wednesday. Let's listen to the experience of other successful markets like Nigeria. But in the meantime, let's open up CSD accounts and let's invest in the instruments that exist. And let's just wait for Ox saving because it's coming on board very soon, and everyone will be able to invest a minimum of 10,000 using their mobile phone.
Amazing. Amazing. Can't wait for that.
Yeah.
Thank you so much, Arnold.
very much.
Thank you for sparing the time. We hope to have you back and some of those investors you talked about with their investor experiences.
Yes.
Thank you.
Thank you very much. Have a good day.
Thank you. And that's it from us today. Thank you so much for staying tuned all the way. If you missed any content, please go back to our YouTube channel. You'll be able to catch all that you missed. My name is Anthony. I'll catch you next time. Have a good night. Bye for now.